Welcome to the Audit Marathon Part 3. In this Part 3, I'm going to cover two standards. One is 530, another one is 520. Don't worry, I know in the part, by the way, I hope you have watched Part 1 video and Part 2 video of Audit Marathon. And if at all you haven't watched, just a minute, please watch this introduction. Don't miss this introduction. I know you are trying to skip. No, please watch it. There is an important information I'm going to give you now. Okay, just a minute. Yes, if you open my YouTube channel, caramharsha, in the playlist, you open May 2024 Marathons CA Inter. Inside that Part 1, Part 2, close to 20 hours I already uploaded. And right now I'm uploading Part 3. If you look at my original Part 1 video, in that I have clarified that in Part 3 is going to be 5 hours. Now I'm uploading 2.5 hours. And I'm going to upload another part number 4. Inside which I'm going to upload items of financials, balance sheet items, because P&L items is covered in Part 2. Getting it? So balance sheet items, I'm going to cover it in Part 4. SQC and HA 220, I'm going to cover in Part 4. Risk assessment and internal control, I'm going to cover in Part 4. By the way, I'm doing this video on 24th April, almost at night. Okay. So first I decided to upload 530, 520 so that in order not to make you wait. So these two put together will be somewhere around 2.5 hours. And for these two standards alone, I have used I have used my colored notes because I'm giving you for these two my previous version revision videos, which are exactly same in the new scheme. Whereas in the Part 4, these three topics were there, right? I need to freshly record now. Okay, I need to record freshly. Of course, for these also have my previous version, but I don't want to give that. So I will do a fresh recording. By 25th or 26th April, you'll be finding Part 4 video, merged version of these three. In the meantime, what you will do, 530, 520 you cover, because MCQs high possibility on these two standards, or straight away a descriptive question also might come. These two topics are covered in the new scheme as a part of audit evidence chapter. Getting it? So, but whatever the video that you are going to watch on 530, 520, they're absolutely relevant for the new scheme, absolutely relevant for the May 24 exams and even September 24 exams. So in the meantime, I don't want you to wait for this. So I should have done this earlier itself, but it didn't strike me. But from the recent past only, I recovered from my complete health issues, everything. So from the past 1 month, I'm working like a racehorse. Getting it? So I recovered like anything. And really thanks everyone who cooperated me to wait for Part 3 video. You are still having 15 plus days per exam for CA Inter Audit. Don't worry at all. Solid time is there. You can finish this Part 3. You can even finish Part 4. Do a very, very proper revision. Okay. That's it. Continue watching this. And Part 4 I'll be uploading by maximum 26th April. Of course, this date and all is not relevant because if at all any of you are watching after 26th April, this and all is not relevant for you. I'm just giving you a clarification here. Okay. And forgot, by the way, these two have used smart notes, right? You can download that material. You can download that material in our Sreshta website. You can download in our Sreshta website. Go to Sreshta for CA/CMA, CA Intro, Group 2, and notes and videos. Inside that, Group 2, just a minute. Paper 5, inside that you see, for 530, 520 revision purpose, I have given a notes. You just download this notes. What I generally recommend, my notes is something similar to institute material. I recommend you to follow whatever material you're actually following. Don't change it now. If at all you're already following my regular material, this material and my regular material are exactly in the same order. Just that in my regular material, in my regular black and white material, you'll find more examples. That's it. Whereas in this, you will not find that many examples, but you will find the core concept. Okay, that's it. So continue watching. All the very best. So the next topic is audit sampling. So I told that I'm not covering risk assessment chapter because that is again a lengthy chapter. That's again a very lengthy chapter. But mainly we are covering main topics. But risk assessment brief idea I'll give you maybe at the end. Getting it? Now let's focus on sampling. See, instead of risk assessment, what I'll tell is, you can study 3 chapters easily. Sampling, analytical, strategy. All these 3 together, minimum 15 to 20 marks. Minimum. Only risk assessment, if you study, it will have maximum 8 marks. Is it better to study these 3 and secure 20 or 8 studying that? But if both take same time. Risk assessment, internal control, how much amount time it takes. These 3 chapters together takes the same time. Getting it? So be strategical in your preparation. So fine. So sampling here, nothing but we are going to discuss about SA 530. We are actually discussing about SA 530. So what is this audit sampling exactly? Now what is this audit sample exactly? Just 1 minute. Now let's look at how in reality practically the sample works. First, if you understand this, like how exactly the sampling works, you might have seen in the sampling there are various topics called stratification, value weighted selection. You have seen all that, yes or no? And haphazard sampling, random sampling, simple random. What exactly the difference between them? All that we will see this with this practical illustration. This is a sales report given by the MS Excel itself. In the MS Excel itself, the sales report is there. The Excel itself, its own sales report. Now you see here, this is the total which I have calculated. Getting it? Now I'll just, this is the product which the company is actually dealing. And these are the customers who actually purchased. And this is the total value for which customer has bought the goods. Getting it? So in this Excel sheet, we will apply the sampling technique. Getting it? Now I'll copy this entire data. This is the raw data. This is the raw data. I'll copy this entire data onto another one. Another sheet I'll copy. And you see, this is the data and which I'm copying to another sheet. I'll zoom it. And in the column, I'll just remove it. So this is the total sale value and the customer and product. Getting it? Now what is the population value? 1,54,491. Getting it? A dollar or rupiah vitrunga. Just understand the concept. So serial number. How many transactions we have? Not 78. 277 transactions we have. So how many we have here the transactions? 277. Getting it? So what is the total transaction value? 1,54,491. So this is the status. This is a population. Correct? Now here my objective is to select 20 samples. Have you heard of random number tables? All of you? Now, how do I apply random number tables? This is population, filtered population, correct? This is population. I hope here it is visible to everybody. Here also, right? Yes. Now, from this, I apply simple random sampling. Getting it? Now, I want to select invoices. Totally how many invoices I want? 20. What is the invoice number? 1 to 277. 1 to 277 totally. And how many samples I want? 20. So random between 1 to 277. Correct? So 81. That sample we are selecting. Totally how many we want? 20 samples we want. So yes. So these are the samples which I am going to select for audit. 141 voucher, 211 voucher, 136 voucher, 163 voucher. Likewise up to 37. Understood or not? Now, so this voucher value, how much I will apply? This voucher value, how much I will check? So 141 voucher value is how much? 42. Getting it? Likewise, I'll apply. So this is the total vouchers which I have selected. What is the total voucher value which I have selected for sample? 11,614. Have you understood? 211 voucher value 60 rupees they said. We'll see 211 voucher value 60 rupees or not. Yeah, exactly. Correct? And here 163 voucher values I have selected. We'll see 163 voucher value.
How much it is? 68. Here also it is 68. Correctly arrived or not? Now you tell me, these vouchers I have selected. No, these are the vouchers which I have selected, numbers. Did I apply any my personal bias? They were randomly selected by using random number tables. What is random number table? Did I use any table book? Earlier we have table book. Now we have Excel sheet. So is there any number that came out of my choice? This is simple random sampling. Able to understand, all of you. Now you see. Now let us apply. So what is the total value? Now what is the percentage of the total value to the total value of the population divided by what is the population total? So approximately it is 8%, correct? Approximately 7.518%. So this is the sample value which I have selected in simple random selection, correct? Now I will apply haphazard sampling. I'll apply haphazard sampling. Haphazard sampling means I am selecting randomly, but I am not using random number tables. Now haphazard selection. Have you heard of haphazard selection? Now I want how many samples? 20. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. So some last one, okay, 20. This is haphazard selection. Haphazard means what? I don't follow any technique. In haphazard selection, the auditor will not follow any structure technique. On the other hand, he will avoid personal bias. Have you seen this sentence? Is there any personal bias I used here? But randomly I selected. What is the difference between simple random sampling and haphazard? Both are random. But in simple random sampling, numbers also I will not use. I will use random number tables or computer scientific I'll select. Haphazard I will manually select. Both are random. Which is more scientific? Simple random sampling. Have you heard? Saw no simple random sampling. Now we'll see what are the samples that we filtered. What are the samples that we filtered in haphazard? I will filter to next, So these are the haphazard selections, right? Which I did. This is the sample which I selected in haphazard sampling. Correct? What is the sample which I have selected? 10,265. Now I'll apply. What is this total to population? Now what is the population here? So this is the population, yes or no? So this divided by population. Now it is approximately 6.65%, correct? Now this is simple random sampling, haphazard sampling, correct? Everyone? Now if I go to the again population, I'll apply block sampling. Block sampling means what? Selecting items of contiguous, like continuous items. Getting it? First number in simple random sampling, first number is what? 141. This is randomly selected, right? I will take 141 as starting point. I will select next 20 items continuously. I will select 141 as starting point. Next 20 items. 141, 142, 143, 144, 145, 146 up to 20 items. I will select all 20 items at a stretch. This is what? Block sampling. Or I may have multiple starting items. Let me select block of 5 samples. Suppose 141 is one block. 141, 142, 143, 144, 145. These invoices I will select. Then what is my next random number? 211. From there again 5 samples I'll select. What is my next number? 136. From there again 5 samples I'll select. What is the next invoice? 210. From there again 5 samples. Like that totally 20 I'll select. This is block sampling. Able to understand. Next, what is systematic sampling? Have you heard of systematic sampling? Interval sampling. Systematic interval. Now what is the total sampling units in the population? 277. There are totally 277 sampling units were there. From these 277 sampling units, I have to select 20 samples. I have to select how many? 20 samples. 277 divided by 20. is equal to how much? 14. Approximately it will come to 14. So first item I'll select. From there again 14th item I'll select. From there 28th item I'll select. From there again 42nd item I'll select. Next 15th, 6th item I'll select. Simply 14th table. So I'll select, I'll apply that. Those invoice numbers are my sample. This is systematic sampling or interval sampling, where between two invoices the interval is 14. Now if I apply 14 interval and select no entire population, how many samples I'll end up with? 20. Understood? So this is systematic sampling. Now the most another thing is stratified random sampling. What is the leftover method? Stratified random sampling. Now you see here, let me apply stratified. Stratified will be selected here, okay? Stratified random sampling. Now you see, if you observe the population, is filter value you've seen? Filter. The value inside the table is visible slightly here. Here it is visible. What is the first number? 12.5. What is the first number? What is the last number? What is the last number? 4,700 approximately. The last number is 4,700 approximately. Correct? Huh? Are these both values similar values or extreme values? Very good. Are they homogeneous or heterogeneous? Heterogeneous means completely different. Now you see, when I see the population, now tell me, now I applied simple random, right? Random number tables I used, right? Can I say in this 4,700 rupees value has been damn sure selected? Can I say that? May or may not. Who knows? It's 277th invoice value. That is some invoice value 4,700. Can I say in this simple random sampling for sure 4,700 is selected? Can I say in haphazard 4,700 is for sure selected? I don't know. I just selected randomly. It may come, may not come. Correct? Huh? It may come or it may not come. Now tell me, when I study this population, when I observe this population, when I interpret this population, I discovered that there is an item which is 12 rupee. There is a sale value which is 100 rupee. There is a sale value which is 300. There is sale value which is 1000, 1500, 2000, 3000, 4000, 4700. Now the company is selling goods at various levels. Correct? To various customers. Now tell me, generally in any company, for selling small quantity and for selling high quantity, the process is same or slightly different? Differs. Correct? Now tell me, if I do not pay attention, if I do not observe this point and simply select 20, I may be ignoring high value items. Or I may be selecting mostly low value items. Can I treat high value items, low value items equally? See, in simple random sampling, I applied random number formula and I selected 20 samples. Any number might come, correct? Which means all invoices were given equal chance or not. In haphazard also all invoices were having chance or not. Correct? But when I studied this population, I discovered high value items. According to me, anything more than 2,500 rupees is high value in this company. In this company, sales more than 2,500 rupees is high value for me. 1,000 to 2,500 is medium value. Less than 1,000, low value. Can I select sample randomly from low value and randomly from medium value and also high value? If I select sample from all the three, can I cover all the parts of the population? Is my sample more representative? In population there are extreme values, in my sample also extremes are there. My sample is more representative. Able to understand? Now let me apply that technique. So I will filter samples having greater than 2,500. How many were there? Sorry. 2,500. How many came? Only 6 items were there. Big items are only 6. Why should I apply sample? I will select all the 6. Can I? I will select. What happens? What's wrong in this? So I will select all these items. Yes or no? All high value items. Getting it? I will select. You might have seen this. In value weighted selection, auditors focus mainly goes towards high value items. Have you seen that? Getting it? Now, then I will select medium value. Greater than 1000, but less than 2500. Sir, no. Oh my God. Here approximately 37 invoices were there. Between 1000 to 2500 only 37 were there. More than 2500 6 only were there. Totally 43. Small value items are approximately 230. Small value items are approximately 234 items were there. But as a whole, how many samples I want to test? 20 only. Already how many selected? I will select from this another 8. Yes or no? 1, 2. Here I apply again haphazard technique. Yes or no? So how many it is coming like here? How many? 7 I selected. So another number I will select. Randomly. Randomly I selected. What is stratified sampling? Dividing the population into subgroups and selecting sample from each group. That's what I am doing. Yes or no? First I divided the population into 3 parts. Items value more than 25. Items between 1000 and 25. Items less than 1000. From each part I am selecting sample. Randomly. That is called stratification random. Stratified random. Correct? Now, next, what is left over? Small value items we should select, no? So, less than 1000. So, less than 1000, I will select randomly how many? Already 8 plus 6, 14 were selected. Just another 6 items I will select. Yes or no? Just another 6 items I will select. Vandarcha? Yes. So, these 3 I will hide. So, what I have selected ultimately is this. These are the samples which I have selected. Hey, what happened? Did I select it in wrong column? Oh, sorry. Now, totally how many I have selected? 20. Correct? Now, I will filter these 20 into another place. This is what? Stratified. Yes or no? This is what? Stratified. Now, I will see the total. Now, you see in this my stratified sampling, small value items are selected, medium value items are selected, large value items are selected. Yes or no? Now, you see the total. 34,000. Now, you see the formula with the population. With the population if I check. With population if I check. Approximately how much value it gained? 23%. You see, here also I have selected 20 samples only. Haphazard I selected 20 only. Simple random I selected 20 only. But I am selecting with the same 20. I am verifying more value. In which method? Stratified sampling. And I can say confidently, if someone asks me, have you verified material items? I verified. Have you verified medium items? I verified. If I focus only on these two, management may do frauds in low value items. I verified them as well sampling. My sample is more representative. Through this methods, we understood now what is haphazard, what is simple random, what is stratified random, what is interval sampling, what is block sampling. Understood or not? This is called statistical approach. What is non-statistical approach? Non-statistical approach means where I don't use all this scientific methods, probability methods, random methods. I don't apply. My favorite number, let us assume 1. I will select all the vouchers which will have 1 number. Able to understand? This is personal bias. What is this called as? Personal bias. Bias cannot be avoided. But tell me, whatever method of sample I am using, tell me what is the purpose of sample? What is the purpose of sample? I'll give 2 options. In order to draw conclusion on the sample, or in order to draw conclusion on the population. Exactly. The objective of sampling is not to select the sample, not to form an opinion on the sample, but to form an opinion on the. Yes, very good. That's it. So now we apply the sampling technique in test of controls. We apply the sampling technique in test of details. Now, in the sample selection, is there a risk again? Sampling risk, we call it as. What is it called as? Sampling risk. What is sampling risk? what kind of wrong conclusions that we may end up because of the sampling risk, how to use the sampling technique, how to project the mistakes, all that we have in our syllabus. Are you getting it? So with this we understood scientifically how we apply sampling. Now we just have to look at the book. Just a minute. Yes. So now let's look at how, what are the concepts that we need to discuss. So in the previous exam, in the previous exam, they gave a question, something related to this introduction. At the last there is another para which you will find in main book. Getting it? So non-routine checking, routine checking, that is the wordings which they used. So they indirectly asked you about the sampling. What is audit sampling? First of all, we apply our audit procedure. We verify. What do we verify? In a sampling method, we verify entire population or sample. Sample means less than 100% data. That's it. Audit sampling refers to application of verification procedures to less than 100% items within a. So that is called auditor sampling, based on which auditor draws conclusion about the static. Getting it? All of you. Now, just a minute. Now, what is the objective of auditor? The objective of auditor in sampling is to provide a reasonable basis to draw conclusion about the population from which the sample is selected. See, in the population in our example, 277 bills were there totally. Each item is called a sampling unit. Whatever is selected is called a sample. Are you getting the point? Next. This standard applies when the auditor decided to use either statistical or non-statistical sampling. Getting it? And when designing a testing sample, when performing test of controls and test of details, and how to evaluate the results based on sample. The moment you decided to adopt sampling technique, this standard SA 530 applies. SA 530 heading is audit sampling. The chapter heading is also audit sampling. Now, what do you mean by population? Population is nothing but entire set of data from where sample is selected, based upon which auditor will draw conclusions on the population. First, a population must be appropriate. Getting it? Appropriate population it should be. Appropriate means what? Relevant. What is the, from wherever, see what samples you want to select. See what you want to verify. Purchases I want to verify. What is, in order to verify purchases, what is appropriate population? Purchase register, DRN register, purchase order register. These are the appropriate population. Yes or no? Not only that, before you select the sample, you must ensure that the population is complete. If the population is incomplete, your conclusion on that incomplete population from where you drawn the sample will also be wrong. If you want to audit purchases, make sure entire purchases were populated first. From that you have to select. Suppose tell me in our example, out of 277, if 30 bills I removed and then selected sample, the result, will it be reliable? Exactly. And population from where you're drawing sample should be reliable. It should be generated independently. It should be generated by right person. Getting it? What is sampling unit? It is nothing but individual item in each and every individual item in the population. Total of sampling units is equal to population. Are you getting it? Now, audit procedures are applied on these units which are selected, and conclusions will be drawn on the populations by using a projection, by using a technique called projection. By using a technique called projection, which is also called as extrapolation. Able to understand? Whatever conclusions we are drawing on sample, that conclusion becomes on the population. You see example of rice cooking. This we say, this quotation also we say. Getting it? So whether the rice has been cooked properly or not, cooked up. We don't check the entire each and every grain. We only check sample. Correct? If the sample is too wet, we say that the rice was not yet cooked up properly. Yes or no? It's not boiled properly. Now, what is the approach to sampling? We have two approaches. One is non-statistical approach, another one statistical. What is statistical approach? Where selection will happen on a random basis, where we use probability theory to evaluate the sample results. What is probability theory to evaluate sample results? Suppose out of 20 samples I have selected, out of 277, if I discover one mistake, it's 5%. It's 5%. 1 by 20 means 5. I naturally feel that in 277 also 5% mistakes were there. This is called probability application. But it is not as straight or as simple as what I told. First, whenever you discover a mistake in sample, first you should assess the nature and characteristics of the mistake. Is it anomaly or is it non-anomaly? You need to first understand that and accordingly apply. Able to understand. Now, sample is chosen by applying some mathematical and statistical methods. I use random tables, no? Yes. What is non-statistical? Which do not have the above features. Ultimately, what is the objective of sample? Selecting representative sample. Tell me, when the sample is representing the population correctly, only then my decision on the sample I can apply on population. Correct? Only if I select the sample correctly, which will have all the characteristics of the population. Getting it? Then only my sample is representative. So whatever approach you follow, ultimately the sample selection objective should be representative sample. Correct? And so the sample characteristics must be close, similar to whole population. Although not exactly same, but similarity should be there. Able to understand? Now, sampling process is performed on test of controls to identify deviation from the control. Whereas in details to identify misstatement. The word deviation is used in the context of control. Misstatement is used in the context of details. Remember. Able to understand, all of you. Next. So balance, we will discuss in the next session. The balance continuation and all, we will discuss in the next session. Clear? Hardly another 30 to 40 minutes, we will close up this chapter. I'll give you a clear-cut idea of how to understand this chapter, then you can go and understand later easily. So, let's continue. So, we are discussing the difference between statistical and non-statistical sampling. The difference is, in statistical sampling, we use the probability theories. We apply mathematical calculations. Especially, the statistical sampling is useful where large number of transactions were there in a given volume of data. So in that time, the statistical sampling is useful. And in statistical sampling, we don't have any personal bias in selecting the sample. And the evaluation will be absolutely scientific based on the result of the sample. And in case of larger organization, statistical sampling is something which is always recommended. Whereas non-statistical sampling, the sample is selected based on personal bias. See, when I am selecting sample unbiased means what? I am not looking at the item in the population when I am selecting. That's called unbiased selection. Biased selection means what? Where I will be looking at the item in the population and selecting that specifically for some reason. Able to understand? So that is called personal bias. So the degree of objectivity cannot be assured. How far you are independent in selection, that cannot be assured in case of non-statistical sampling. Moreover, in non-statistical sampling, we usually check it, large items, especially which are recorded at close, year end. At the closing time, whatever major transactions were there, that is what we generally check in non-statistical. See, first of all, we don't apply any non-statistical technique. By default, we select samples on random, right? The moment you select it on random basis, it is statistical sampling. Simple. Next. And here, the results cannot be measured because they are not scientific. And moreover, in case of non-statistical sampling, the sample selected is not representative. Now they have given one MCQ. Sorry, one correct or incorrect question in one of the exam. Sample size is not a valid criteria. Sample size is not a valid criteria to distinguish between statistical sampling and non-statistical sampling. This is a statement. The answer is correct. Sample size is not the criteria to differentiate between. Do we see any criteria regarding sample size here? What is the difference between statistical, non-statistical? Is there any discussion on sample size? Whether I select 20 samples out of 277, 25 I select, 30 I select, is there any link with the approach that we follow? Forget about approach. Even within statistical, simple random, stratified random, even there also we are not following based on sample size. Suppose have we seen in simple random 20, in stratified random 15 enough, like that have we seen? Sample size is not at all a criteria to distinguish between methods of sampling, approaches to sampling. Getting it? Sample size is a level. See, you need how much level of assurance? I need more level of assurance. Naturally, I select more number of transactions. Are you getting the point? So, sample size will be that much where sampling risk is low. Nothing but where audit risk is low. Whatever sample size you feel sufficient, that's it. In audit evidence, we see sufficient appropriate evidence. Nothing but sample size. That is mainly dictating, that is mainly, directed towards sample size. Able to understand? Next. Now, how sampling is different from traditional methods of checking, which is something you can read on your own and understand. Easily you can understand. Getting it? Now, factors to be considered, this I'll come back again. Now, let's look at various methods of sampling. Sample selection and methods of testing under sampling. First of all, you shall select items in such a way that each sampling unit has a chance of selection. So every sampling unit should be given a chance. Every unit in the population should get some chance that it will be selected. This can be achieved only in statistical sampling. The purpose of sampling is to provide a basis for the auditor to draw conclusion about population from where it is selected. And it is important that auditor selects representative sample so that bias is avoided. Now, selection methods. We have so many selection methods. Getting it? We have so many selection methods. Simple random sampling means what? Simple random sampling means it's a method where each unit, every item in the population has equal chance of selection. Yes or no? We have seen formula 1 to 271, any 20 items we want. We selected in Excel. Any number can be picked, right? So item number 1, what chances it has? Item number 279, what chances it has? Both are same. Equal chance. Random number tables are simple and easy to use and also provide assurance that bias does not affect. Now we use Excel sheet random number table technique. So is there any bias? Is there any my personal judgment in that number selection? No. This method is considered appropriate where population has a reasonably similar units. Now in our example, there is 12 rupee item, there is 4,700 rupee item. Simple random sampling, though it is fine, but when the variation is too heavy, is it right method? When simple random sampling can be applied when suppose entire population, all the amounts are more or less similar. They were in a particular range bound, not extreme variation. Then I can apply simple random sampling happily. But when the population comes having extreme variations, it is always better to divide the population into subparts and select sample from each subpart. Correct? So what is stratified? It means dividing heterogeneous, diversified into homogeneous populations. Yes or no? Now in our example, 12 rupees to 4,700 is the total population. We divided that into three categories. High value, middle value, low value. Now within low value, all items are similar. Within medium value, all items are similar. High value, all items are similar. That's what. So splitting heterogeneous population into homogeneous population. Now how can we stratify? In our example, we stratified it based on monetary unit. It is called as monetary unit sampling. We stratified it based on monetary unit. So we call it as monetary unit sampling. Able to understand? Stratified sampling, another name is monetary. Suppose I am doing audit of expenditure. I am doing audit of expenses. Expenses are so many. I will now classify them as 3 types. Factory related expenses, admin related expenses, and sales related expenses. Can I classify like these 3? This is also stratification only. But is this monetary unit sampling? Now here I am dividing the population into multiple parts based on the nature of expenditure, not the amount involved. Correct? So the method dividing whole population to be tested into few separate groups is called as strata. Each stratum is treated as if it is a separate population. Items will be selected from each of the stratum. Number of groups into which you have to divide is your professional judgment. We divided it into 3 parts. I may divide them into 5 parts. I may divide them into 7 parts. That's your choice. It's a matter of professional judgment. Generally, for the top group, 100% items we will verify. Correct? Why? Big items are generally less in items. So even though if you verify 100%, it is okay. Whereas from the lowest group, we verify 2%. Example. In our example also, 234 items were there. 6 items only we verified. Hardly 3% sample we verified from the lowest group. Yes or no? Able to understand? That's about stratified sampling. Now immediately we need to see the techniques of stratification and value weighted selection. So what is stratification? Stratification means what? Dividing population into discrete, means independent subpopulation which have identifying characteristics. We divided the population into 3 parts. Value more than 25, value between 1000 to 25, values less than 1000. Each subcategory has an identification. No. What is the identification? More than 25, 1000 to 25, less than 25. That's a side heading. Yes or no? That is called identifying characteristic. And that process of subdividing is called as what? Stratification. Each subpopulation is called as stratum. Units under those are called as strata. That's why it's called stratified random sampling. Now, audit efficiency can be improved if auditors stratifies population by dividing it into subpopulation. Efficiency we can increase. How? When we selected simple random sampling, 20 samples we selected, but the value came only 10,000. But we apply stratified random sampling, same 20 number, but 34,000 rupees worth we verify. Efficiency of audit increased or not? Same 20 we are verifying, but output is coming so much. Able to understand? The objective of stratification is what? To select the sample from all parts of the population having different characteristics. Yes or no, it is proved or not? Next. When performing test of details means what? Actual transactions, sales, purchases, expenses. Often stratification is based on monetary value. How we stratified the sales data now morning? How we stratified in the previous class? Based on monetary value. Able to understand? Now, how projection will apply here? Suppose you divided into subparts, right? From each subpart you selected sample, right? Suppose small items 234 were there. Out of which 6 we have selected. Out of 6 we found 1 mistake. 1 by 6 mistake. 1 by 6 we will apply in total 277 population, or we apply total 234. We need to project to that stratum. Suppose generally sampling, how we apply sampling is, suppose out of 100 1 mistake is there. Out of 10,000 how many? This is what projection means. But when we divide this 10,000 into subparts, projection should be made to the total gross population or subpopulations. Subpopulations. So projection should be made for each subpart, and the total projection we should make to population. Understood or not? So the results of audit procedures applied to sample within a stratum can only be projected to the items that makes up that stratum. Able to understand? Every sentence you see how you can correlate. Now, the results of sample from the units drawn from subpopulation are projected to the respective stratum. And finally, in order to draw opinion on the population, auditor need to combine the result of all the stratums to check possible deviation, to check risk of MMS in the whole population. Are you getting it? That's it. So projected misstatement of each stratum will be combined to consider possible effect of misstatement in the actual account balance or the transaction. Nothing but that is the population. Clear? Now, what is value weighted selection? Value weighted selection is the sample size, selection process, evaluation, everything is in monetary amount. Now you see, stratification means it's a technical term. Now in our example, sales data, how is stratified? Based on monetary amount, based on value. Yes or no? Now when we divide the strata, when we divide the population based on value, that's actually called as monetary unit sampling, or the technique is called as value weighted selection. We are giving high weight to which items? Large items or small items? Large items. You see, that's why large items only 6 were there. All the 6 were selected. Yes or no? You see, when performing test of details, it is better to identify sampling unit as monitor unit. The auditor will be more focused for large value items because they can result in smaller sample size. The approach can be used in combination with systematic method as well as random selection. Generally, we apply stratified selection. Generally, we apply stratified random. Value weighted selection we apply with random selection. We don't go with systematic selection, which is most popular. That's what most efficient when using with which method? Random method. So, getting it? Next. Now there is a discussion on sampling risk. Now, by the way, still we have some other methods. What is systematic selection or interval sampling? We divided 277 divided by 20 sample size is equal to 14 is the interval. What is systematic selection? It's a selection method where sampling units in the population is divided by sample size. Total in our sales report, how many sampling units were there? 277 divided by 20. What is the interval? 14. The starting point may be haphazard. The starting number may be haphazard, but it is more likely random. Okay, if at all we select that number by computerized random number. When using systematic selection, the auditor would need to determine sampling units within the population are not structured in a way that sampling interval corresponds with a particular pattern of the population. So what is the sentence? These kinds of sentences, if at all asked for true or false statements, that's it. You're gone. Now in interval sampling, I am deciding to select every 14th item. Suppose in the company, every 14th expenditure is, let us assume, repairs and maintenance. And when your interval is also 14, you selected 20 samples in expenses. All the 20, what you will get? So your interval should not match with any pattern. Able to understand? The pattern of transaction and the interval should not match. You should take that kind of precaution. Otherwise, see why the reason why you're following systematic selection because you want to select all the expenditures, all the types. But every 14th transaction is always this one. So automatically what happens? It will become one pattern. Only one set of transactions you are selecting. Are you getting the point? Every 10th sale in this company is to so and so vendor or so and so customer. So you are selecting 10 as interval for sales verification. All invoices that you select for sample will belong to only one customer. Again problem. So that's what. Now you see the sentence. So in systematic selection, auditor would need to determine the sampling units within the population are not structured in a way that sampling interval corresponds with a particular pattern of the population. Understood? Therefore, systematic sampling when chosen as a method would be carefully applied and you can have more than one starting point. Suppose point number 1, 14, 28, 42, 56. Likewise, I am going again I will put a random number. From there again 14 I will count. Are you getting the point? Next, monitoring. It is nothing but value weighted selection where the sampling results, everything is in monetary amounts. Haphazard sampling. This has asked for many times 4 marks question. Getting a stratified random sampling is also asked many times. Haphazard. Haphazard means what? Auditor select the sample without following any technique. The auditor will avoid bias and predictability. We did haphazard selection. Do we have any bias? No. But we don't use random number tables. Getting it? This method is not superior when compared with other sampling methods. In this method also, every sampling unit will have a chance of selection, but may not be equal. Because I am selecting manually. So how do I know? How do I run computer button correctly, equally? I can't. But if it is given to computer, it naturally selects equally. Able to understand. That's it. Then we have block sampling. Block sampling, I hope you'll read and understand. Getting it? This is easy method. Next, sampling risk. So what is a sampling risk? So what is sampling risk? So sampling risk means what? Risk of not detecting, risk of not detecting a material misstatement. This is audit risk actually. Risk of not detecting a material misstatement is in fact not audit risk, in fact detection risk. More clear. All these three are interrelated. Risk of not detecting a material misstatement, that is actually detection risk, because of which audit risk will increase. And why detection risk arises? One of the reasons why detection risk arises is sampling risk. So what do you mean by sampling risk? Risk of selecting an inappropriate sample. What is inappropriate sample? What you are verifying in the sample, the characteristics of the sample are completely different from the characteristics of the population. The characteristics of the sample is completely different from the characteristics of population. When you verify the sample, you get one kind of conclusion. But if at all you verify the population, no, if at all, you will get completely different conclusion. Which means, whatever conclusion I am forming on sample is not matching with population if I verify the population. Example, what are the wrong conclusions that you might get? Getting it? In case of test of controls, what kind of conclusions you will get? In case of test of details, what kind of wrong conclusions you will get? In case of test of controls, risk of over reliance. Another one is risk of under reliance. Risk of over reliance, risk of under reliance. In case of test of details, risk of incorrect acceptance, risk of incorrect rejection. What are they? Risk of over reliance, risk of under reliance in case of controls. In case of details, risk of incorrect acceptance, risk of incorrect rejection. Look, we do verified controls also on sampling basis only. Controls we verify on what basis? Sampling basis. Example of one control is, suppose in this company where I am doing audit, the purchases value more than 5 lakhs. Whenever company want to place a purchase order, where the order value is more than 5 lakhs, this order shall be approved by finance manager and CFO. This order shall be approved by both of them. Only then the order will be entered into the system. Getting the point? Only when this order is entered into the system, we can accept the goods when they are delivered. Suppose if a supplier sent goods to us, in a company, when a supplier sent goods, storekeeper may not have any idea. So when goods came, the other party will tell, sir, your company ordered goods. Storekeeper, what he will do? Okay, sir, accept, and he will give acknowledgement. Naturally, it became purchase, liability. But whether our organization placed order or not, how do we know? So we should tell storekeeper immediately, first, whenever somebody is sending the goods, first receive the goods only when there is an order from our company. Now he need to give acknowledgement of receipt, no? That acknowledgement will not generate without PO, without purchase order. And who is ordering? Not that store person, purchase people, somebody else is ordering. They will order, that data will be entered into the system, and this fellow, when goods received, no, he need to give acknowledgement for goods received, right? When he is entering the goods received, it will ask first question, against which PO, which purchase order these goods are received. First you need to map that. Only if we map that, suppose purchase order contain 1000 units, and whereas this fellow sent 1200 units, he cannot accept beyond 1000. He can only give acknowledgement for 1000. Even though he deliver all the 1200, he can give acknowledgement only for 1000. Liability can be booked only for 1000. And this fellow is only giving GRN. Now like this, in the computer, restrictions will be given. This is called control. Now I need to test these controls. How purchases related controls are, I need to test. How do I test the controls? I will take few samples, only check this control. I'll take all the purchases where the order value is more than 5 lakhs. I'll take some 10 purchase bills, purchase orders more than 10 lakhs or 5 lakhs. I'll cross verify what is the policy. FM, CFO, both should approve. Both are they approved or not? I'll check. This is called test of control. What is this called as? Test of control. Sir, you are actually selecting the invoice and checking. No. Is it not test of transaction? Is it not test of detail? No. This is control checking. I'm only checking that control. Now I felt, yeah, everywhere authorization is perfect. GRN I saw. Yeah, GRN every time whenever they are accepting, PO mapping is done. I saw every controls like this. I tested controls are effective. Then I will take some 100 purchase transactions. Then I will check how, when the PO was raised, how much quantity, when the GRN was issued, how much quantity, payment slips, and when the bill was, when the voucher was prepared, when the entry was passed in the books, at what value it was passed. This is substantive procedure. What is this? Substantive procedure. Test of detail. Nothing but the actual transaction testing. Able to understand. In test of detail, the transaction will be tested right from its origin till the end. Whereas in test of control, I will only check that control element. In both the cases, I will check with voucher only. But the objective of verifying is different. Are you getting the point? All of you. Now, in test of controls, when I see the control is working fine, I saw some 10 samples. All the 10 samples purchase, finance manager, CFO, everyone is signing. I felt control is effective, excellent. But actually in reality, whatever samples I selected only, they followed control. In the remaining samples, they didn't follow the rules. In many cases, they didn't follow the rules. Almost 1 in every 3 invoices, they don't follow the rule. 33% deviation is there. But bad luck. Based on the sample I have selected, I felt controls are working very well. Am I believing them or not? Over reliance. Tell me what will happen because of trusting the control too much. I will select lesser sample size for test of details. If controls are effective, I will do less substantive procedure. When I do less substantive procedure, what will happen? The possibility of discovering mistakes will reduce. Now tell me, when the discovery of mistakes reduces, I will not discover mistakes. I will say everything is true and fair, when in fact, so many mistakes are there. Am I giving wrong opinion or not? Audit risk. Understood or not? So that is called risk of over-reliance. Risk of under-reliance. Company transactions are everything perfect. The controls are working absolutely fine. But I randomly selected some 10 vouchers and saw the control. Everywhere it failed. And the fact is, only these 10 vouchers failure is there. Remaining 9,990, they are absolutely fine. But the sample which I selected, based on that only I will go right. The moment I saw out of 10, 5 mistakes, I felt immediately in the population so many mistakes were there. I felt control is not at all working properly. What will I do because of this? I will take bigger sample and I will try to prove so many mistakes, but I will fail ultimately. But because of under-reliance, my audit efficiency is affecting. No. Okay, I may not give wrong opinion. I will do more careful audit, but my efficiency is affecting. No. But because of over-reliance, what will happen? Audit risk will increase. Whereas under-reliance, is there any impact on audit risk? Next, risk of incorrect acceptance. Test of details means what? I will take 100 samples. I verify these 100 samples. I did not find a single mistake in them. Entire GRN, PO, everything, 100% vouching I did. Getting it? I verified 100% transaction. Whatever vouchers I selected in depth. And I did not find a single mistake. Getting the point? I did not find a single mistake. I felt entire population is true and fair. I accepted entire population as true and fair. But in reality, the population is having so many mistakes, which are not discovered in the sample. So, am I accepting the entire population of true and fair or not? But which is incorrect. Now, because of this, what happens? Treating that population is free from material misstatements when in fact they exist. Because of this, what happens? Audit risk increases. My opinion may go wrong. Risk of incorrect rejection means what? I am rejecting population saying they are not true and fair. But this rejection is not correct. What will happen because of this? See, the sample I selected found mistakes. I felt entire population is materially misstated. So I said everything is not true and fair. Now, because of this, is there an impact on audit risk? No. So, this is sampling risk and wrong conclusions that you might take up. You see, what is sampling risk? The auditor conclusion based on sample is different from population, if at all entire population you verified. Selecting inappropriate sample is also called as sampling risk. Like risk of over-reliance, risk of under-reliance, risk of incorrect acceptance, risk of incorrect rejection. Are you clear? Now, detection risk, I told you, the risk of not identifying mistakes. Will this arise only because of the sampling risk? I may even have non-sampling risk. What non-sampling risk? Sample is correct. The way you interpret only wrong. Yes or no? That is called human mistakes. Or you are misinterpreting sample results. Or you are taking wrong information. These kinds of risk, no. Because of this also you are giving wrong opinion. But this risk is coming from not sampling, other than sampling. That is called non-sampling risk. So non-sampling risk is the risk that auditor reaches a wrong conclusion for any reason other than sampling risk. Non-sampling risk can never be measured. Are you getting it? Next. Finally, whatever sample you have selected, whatever sample you have ultimately selected, you need to apply verification procedures. The auditor shall perform audit procedure, whatever is relevant for the purpose. Audit procedure is not applicable to selected item, then he need to perform on a replacement item. What is meant by this? They do ask all these kinds of questions. For this, no, what I suggest is better read main material here. My main material is there, better read that. We have given examples also clearly. What is replacement item? What is, if replacement is possible, alternative procedure? Unable to apply suitable alternative procedure. All this is little bit bigger discussion, cannot be covered in revision. Verify from the main book, you will understand better after all this. Then we have few more important topics. Now, what are the requirements? Fan on, fan. Yeah. So what SA 530 is requiring? What SA 530 is requiring? First, sample design. How you should have sample design? Which method you should follow? First, understand the purpose of audit procedure and characteristics of the population, and then select the design accordingly. If the characteristics of the population are wide variation, I'll go for stratified sampling. Otherwise, I'll go for simple random sampling. Sample selection. It should happen in an unbiased way. Every item will have a chance of selection. Now, how much sample size you will select? It is that much sufficient to reduce sampling risk to an acceptable low level. The sample size must be such that the sampling risk will be reduced to low level. Sampling risk means the possibility that I may take up wrong conclusions based on sample. That possibility should reduce. If that possibility should reduce means I should check more number of samples. If I take less number of samples, if I discover mistake, I will think in a major items of population also there is a mistake. Very simple. 100 samples I verified. One mistake I found. 5% is the mistake. That's what I conclude on population. I took another 100. Nothing I found. Zero mistake. Now out of 200 till now how many I found? Only one. Now what will I interpret? Only 2.5% error. Able to understand in the population. So as the sample size increases, my prediction over the population will also changes. Able to understand. Now, what factors in examination you may get this question also? What are the factors that you have to consider for sample design? So if they may ask you, this also please read from main material. Don't miss this. Please read from main material. Wherever I told you to read from main material or ICA material, please go through that. Now, first of all, can I consider a sampling plan? Can I consider a sampling plan or not? Can I go with sampling or not? It depends upon size of the organization. It depends upon internal control, reliability of books, tolerable error range. In this company, what is the error range possibility? If it is within my toleration level, okay, I can go with the sampling. Suppose if the errors are beyond tolerable limit, better I will not go for sampling. And how much confidence you want. The greater confidence you require, the greater must be the sample size. Same way, we're having another question. What are the factors that affect sample size in case of test of controls? What are the factors that affect sample size in case of test of details? Now here in exam, they'll ask you this question, this kind of question. Very tricky question. Only if you understand entire sampling chapter you can write this. Otherwise you can't. Which of the following is not a factor? Which of the following is not a factor for determining sample size in case of test of details? Option A, risk of material misstatement. Option B, projected misstatement. Option C, expected misstatement. Option D, tolerable misstatement. Which of the following is not a factor for determining sample size in case of test of details? First, you must know meaning for all the four before answering. Getting the point? The answer is projected mistake. And if at all any of you guessed it correctly, don't do festival. Okay, because it can be accidental. Getting it? It can be accidental. What is expected misstatement? What is tolerable misstatement? What is projected misstatement? First you must understand these three. Consciously we should select right answer. Then only you can answer well even for some other question. Getting it? What is tolerable misstatement? It's nothing but performance materiality. Tolerable misstatement means what? It's nothing but performance materiality. Have you seen performance materiality SA 320 definition? Performance materiality means a materiality level set by the auditor at less than overall materiality for financial statements as a whole in order to reduce the probability of undetected misstatements, uncorrected misstatements exceeding the overall materiality. If applicable, performance materiality also means a specific materiality level set for a particular class of transaction or account balance. This is the definition. Not understood, right? So tough the definition was. Getting it? Performance materiality definition is not easy. That is nothing but tolerable misstatement. See, like, I'll give you here glimpse of SA 320. I'll give you here a glimpse of SA 320. Materiality standard. There are two materialities. One is called as planning materiality. Another one is called as performance materiality. This performance materiality in sampling chapter can be correlated as tolerable misstatement. Tolerable misstatement. Planning materiality is also called as overall materiality. Overall materiality. Once you discover a mistake, first you need to interpret the mistake. What mistake it is? What is the mistake nature? You need to interpret the mistake nature. The mistake is of two kinds. Anomaly or non-anomaly. Anomaly, non-anomaly. Anomaly means, there's again a definition. It's a rate of deviation or misstatement that is demonstrably non-representative of population. This is what the definition is. A rate of deviation or a misstatement that is demonstrably non-representative of population. Nothing but anomaly means non-repetitive mistake. What is it called as? Non-repetitive mistake. This is a mistake which is not representative of population. What do you mean by that? This mistake is there only in the sample I have selected. It will not be there in population. Like how? What is that mistake? Example. Suppose an accountant, while entering a transaction of 10 lakhs, by mistake typed 11 lakhs. By mistake typed, one extra. Out of hurry, he typed one twice and he entered 5 zeros correctly. Getting the point? Will this mistake happen every time? Will this mistake happen? Suppose a 10 lakhs value is recorded as 1 crore 10 lakhs. 10 lakhs worth of transaction is recorded as 1 crore 10 lakhs. I discovered this mistake. Now can I say every 10 lakh entry in the books of accounts is misstated by 1 crore? This mistake is there only in that sample. This is called anomaly. By the way, have you discovered the mistake? What is the mistake value here? 1 crore. What is the mistake value here? 1 crore. 10 lakhs to be accounted as 10 lakhs, but they accounted as 1 crore 10 lakhs. So how much is the mistake value? 1 crore. Exactly. Now this mistake not yet corrected by the company. This is called uncorrected misstatement. This is called as uncorrected misstatement. Now this is the 1 crore mistake. Now this is anomaly. Now based on this, can I project mistakes in the population? No. Are you clear? Now next, non-anomaly. In the control, the company's software, there is a small error. What error is? Whenever goods received note, see like what error they wrote, what program they wrote is, the program what they wrote is, like if purchase order contains 1000 units, maximum GRN can be generated for how much? Maximum you can receive for how much against that order? 1000 only. You ordered 1000 means how many you can receive against that order? Maximum 1000. Now here in GRN, while writing the program, they should write less than or equal to 1000. Able to understand? They ignored that word less than. They used the word equal to. Whenever they are mapping GRN, by default system accept 1000. Suppose if PO contain 1000, system also accept 1000. If PO contain 2000, system also accept 2000. But in reality, how many I am receiving? That system is ignoring. Even if I try to enter 900, system is not accepting. If this kind of error is there in the software, every transaction wherever I am receiving less than ordered quantity, every transaction will be misstated, yes or no? Are you getting the point? Now, can I project this? Yes, I can project. I can use this for projection. Depending upon some mathematical calculations, we can use this for projection because it's a repetitive mistake. What is it called as? Non-anomaly. Non-anomalous projection. We call it as what? Non-anomalous projection. Now tell me, when I say 100 crore might be the mistake in the population, is it corrected or undetected? Is it uncorrected or undetected? Suppose I discovered 1 crore mistake. Based on that, I am estimating 10 crore is the total mistake in the population. Now, 1 crore I discovered, 10 crore I am estimating. This 10 crore is uncorrected or undetected. I have not detected, it's estimated. Are you getting the point? Suppose tell me, when I project the mistake plus when I discover the actual mistake, undetected plus uncorrected. Getting it? I take performance materiality, actual materiality 1 crore. If total mistake crosses 1 crore, it's material misstatement. You have to give modified opinion. If it is 10 times of this, it is pervasive. We have to give adverse opinion. Getting it? Now here 1 crore is the total materiality level, right? And I see here below, I will set some 60 lakhs as performance materiality. 60 lakhs I will set for performance materiality. And triviality materiality, we call it as trivial level. I will keep something called 10,000 rupees. I will tell my team members, if any mistake is less than 10,000, ignore. If it is more than 10,000, reporting differences. What is it called as? Reporting differences. Means we will accumulate all that mistakes whose value is more than 10,000. These are all mistakes we are finding in audit. Now we total it and we take projection. If the projected value exceeds this, no. PM level, if at all it exceeds PM level, no. Definitely there is a chance that actual mistake is more than overall materiality. Able to understand? That's how the concept has been developed. That's how the concept. You can watch my marathon, previous marathon, which I uploaded. In that I clearly spoke about SA 320. Around some half an hour, 40 minutes I uploaded. You can watch that. You'll understand. So tolerable misstatement means how much mistake I can tolerate. If the tolerable misstatement which I discovered is less than performance materiality, it's fine. If at all that uncorrected, undetected misstatement exceed tolerable level, the moment my misstatement which I calculated exceeds a tolerable level, I will have to be very, very careful. I will have to select more samples. Once again, I have to redo the working. Again, it is exceeding tolerable level. I will conclude the entire population is materially misstated. Able to understand? That's it. That's tolerable level. Now, what is risk of MMS? What is expected MMS? What is projected MMS? Very simple. How much samples I should select in purchases? I first verify controls, right? Controls are working fine. When controls are working fine, do I expect any material misstatement? When controls are working fine, will I expect any material misstatement? When controls are not working fine, I expect naturally more mistakes. When I expect more mistakes, I want to discover them. I will increase my sample size. When the risk is high, sample size is high. When my tolerable misstatement is very low, my toleration is very low, I can't tolerate mistakes. Then when I cannot tolerate a single mistake also, my sample size will be high. Okay, so many mistakes, up to this much level I can tolerate, no problem. The tolerance level, if it is very high, sample size will be low. Now, once I selected sample, I applied audit procedure. See, there are so many factors, risk of MMS, expected MMS and tolerable MMS. By considering all these factors, I selected some 100 units as sample size. I verified all of them. I discovered 2 mistakes. One mistake is anomaly, another one is non-anomaly. Based on non-anomaly, now in out of 100, one is, see, it's not out of 100, it's out of 99. Out of 100, one is non-repetitive, ignore it. So out of 99, how many repetitive mistakes you found? 1. Out of 99, 1 means, out of 9,999, how many? Are you getting the point? That mistake which you established as anomaly, excluded from the projection. From the sample, from the projection, both you exclude. Out of 10,000, minus 1 is a non-anomaly. So balance population is 9999. Out of 100 samples, 1 is anomaly, only 99. Out of this, you found another one. So how to project? Only you should project for 9999. This is called projection. Projection is the end result of sample verification. It is not the starting point to select a sample size. Understood or not? Projection is something which we do after end of sample verification. After verification, now we will project. Now projection is not a, projected MMS is not a basis for sample size. Is projected misstatement basis for selecting 100 or 120 or 150? Is it basis for me? No. Are you getting the point? All of you. I understand. You didn't study all this. And this is what asked in exams. Next. So, what are the factors that influence a sample size in case of controls, in case of details? I clearly explain few points. You read them later. Getting it? All of you. If I have to discuss that, it will take hours. So projection treatment also just I explain. Getting it? In controls, no, projection is not required. If control is deviated 30%, population deviation for controls is how much? 30% only, because it is expressed as a percentage. Whereas in test of details, extrapolation is required. Anomaly means what? What is the treatment of anomaly? How to evaluate sample results? What are the precautions you should take while applying test technique? So first understand accounting system, internal control system. Identify areas which are not suitable for sampling, first of all, like statutory areas, and planning for sampling methods. All the transaction balances shall be properly classified. Sample size, please determine. Select in unbiased way, and result must be analyzed properly. These are the precautions to be taken whenever you are deciding to apply sampling. Are you clear? I explained you clearly the basics and a medium like commendable idea about the terminology. Now you can study those concepts which are pending. but study only from the beginning, that too from the main material if you want in-depth clarity. Are you clear? That's it. So this is sampling chapter. Then we have analytical procedure, we'll discuss. So let's start with analytical procedures. What is this analytical procedure exactly? First of all, this analytical procedure you will come across at two places. In the audit subject, you will come across mainly the analytical procedure introduction at two places. First of all, what are broad audit procedures? Risk assessment procedure, further audit procedure. You see, we have another question on what are various audit procedures through which you can obtain evidence. Inquiry, inspection, observation, confirmation, recalculation, reperformance, analytical, all these are cumulatively applied, not one is to, like it's not, they are not substitutes, understand. There also they use the same word audit procedure, here also they use the same word audit procedure. What are various audit procedures to obtain sufficient and appropriate audit evidence? If the question is regarding evidence context, then you need to write that inquiry, observation, inspection, all that. Getting the point? What are the broad audit procedures? Getting it? Generally, this question they will not ask. They may either ask risk assessment procedure, or they may either ask write about test of controls, nature of test of controls, timing of test of controls, extent of test of controls. Can we use evidence obtained in previous audit related to test of controls? Like this they'll ask. Or they'll ask you about write about substantive procedures, write about substantive procedures related to financial statements closing process, write about substantive procedure as a response to a significant risk. Like this they'll ask a question. Getting it? They will not ask you to write what are all full audit procedures. They'll not ask. Understood or not? All of you? But this context can be tested in correct or incorrect questions. There when you're reading the question itself, you will understand it is about this, not about inquiry inspection. Or if at all they tested correct or incorrect portion in that context, you will clearly understand. Able to understand. Now, what risk assessment procedure includes? What risk assessment procedure includes? What is risk assessment procedure? Definition is different. So here I'll give you risk assessment chapter overview. So what is risk assessment? I told you about an example. You are identifying the risk. And not only identifying the risk, you are quantifying it. You are assessing the risk. Is it a high risk or medium risk or low risk? Is it a significant risk or insignificant risk? You are assessing the risk. You are identifying and assessing what risk? Risk of. Which risk you are worried about? My risk is, if the financials are materially misstated and I have not discovered them, my opinion will go wrong. So this risk only you are concerned with. You are not concerned with any other business risk. You are not concerned with operational risk. You are not concerned with regulatory risk. Correct? So we are concerned with which type of risk? Only the risk of MMS. So identifying and assessing risk of possibilities for material misstatements through understanding the entity and its environment, including internal control. This is the definition of risk assessment procedure. And auditor shall identify risk at two levels. One is financial statement level, another one is assertion level. Now, when I'm looking at the entire company control environment, I'm looking at the entire company governance. There if I find some problems, there if I find some lapses, the top management of the company do not have integrity. The top management of the company do not have commitment towards proper maintenance of records. This indicates risk not only in one or two aspects, but this indicates risk in every aspect. Suppose if production manager is not a good person, is having malified intention. Production manager is he's having so many pressures on him, so he might do a fraud. Now that will affect what? Maximum production records. That's a risk of production record. Company CEO himself is having this kind. Now where he will do fraud? Everywhere. Able to understand? Top management Those charged with governance integrity, that's a financial statement level risk. In fact, this is also called as pervasive level risk. What is this is also called as pervasive level risk. Suppose a production department, there is some problem. Or inventory, there is some issue. Cashier, there is some issue. Getting it? Sales team, there is some issue. In vendors, we have some issue. These risks are what? Assertion level risk. Because if something goes wrong there, only that particular assertion will affect. Only that inventory will affect. Only the debtor balance will affect. Correct? Sometimes multiple assertions risk together will evolve into financial statement level risk. So, see here, auditor will not identify risk at two levels. Whatever risk I identified, I will classify them at two levels. You know, when we find something called financial statement level risk, we will not continue with audit. What we will do? We will withdraw. Getting it? We will withdraw. When auditor finds financial statement level risk, he will definitely cannot continue the audit, because when the risk is at entire financial statements, how can I proceed with audit? Because the management, the accounting records completely become unreliable. The moment financial statement level risk is there, the financial statements prepared by management itself will become questionable. So naturally, I cannot be doing audit. I cannot do audit with that kind of mindset. You know, skepticism, auditor need not doubt the management. But when he finds a circumstance, be alert. That is what skepticism says. Skepticism means what? Be alert. Maintain that alertness. Be cautious. Be careful. Act diligently, carefully. But it is not saying question everything, whatever management is doing. Be doubtful about the management. Don't trust the management. They are dishonest people. No. With this attitude, don't start the audit. But if you discover such a kind of attitude, if you discover that the management may manipulate every record, obviously with that kind of doubt, you cannot do the audit. Understood? So most of the risk that we find in our real life is assertion level risk. Assertion level risk means what? We discussed risk assessment example. Laborers, casual laborers. So here in employee wages payment, they may do a fraud. Assertion level risk. In inventory, scrap related fraud they can do. Assertion level risk. Now we need to design our audit procedures. We need to, design and implement, or we need to plan our nature, timing, extent of audit procedure to address these risks. Able to understand? This is called response to the risk. Are you getting the point? Now they may ask you, what is the auditor's response to a significant risk? That's a question given in the, SA 330. How auditor will respond in case if we identified significant risk. You see in the documentation evidence chapter part 3 you will find. That is the controls related discussion, audit procedures. So auditor should generally get external confirmation. Whenever there is a significant risk, wherever possible, auditor should get external confirmation. That's what the main agenda. Are you clear? So this is what there in the risk assessment process. Now how do you identify the risk? Including internal control. You will test the control. I clearly explain how test of controls happen. How test of controls will happen, I clearly explain. And so when an auditor will be testing the control, remember, controls means what? It means a process. It means a process. At the end of the day, the door will be closed. At the end of the day, campus main entrance door will be closed and locked. It's a process. It's a control. Why? To protect these assets. Safeguarding of assets. Have you seen that objective? Internal control, what are the objectives? 5 objectives. Protect the safeguarding of assets. Increasing efficiency and effectiveness of operations. Why we are fixing timings? In order to increase efficiency and effectiveness of the ultimate operations that we are taking up. Able to understand? Ensuring that the financial statements are reliable. And by implementing all this, you are preventing frauds and errors. Or by installing the CCTV cameras, whatever, you are able to detect if any frauds went wrong. Correct? And any process that you design in order to comply with law and regulation, those are also form part of internal control objectives. 5 objectives. Yes or no? Reliability of financial statements or reliability of financial reporting, prevention and detection of fraud and error, efficiency and effectiveness of operations, then safeguarding of assets, compliance with laws and regulations. These are the objectives of internal controls. Now you have these internal controls 3 types. Internal controls based on where they were implemented, how they were implemented, 3 types. Operating controls, compliance controls, financial controls. We don't have discussion much in depth on operating controls and compliance controls. That's again a very big subject. We have a discussion on financial controls. What are IFC? What are objectives of IFC? Now here we discussed 5 objectives. No? In that, efficiency, effectiveness of operations is there. No, remove that. Because operations will be taken care by which controls? Remaining all 4 objectives will come under financial control objectives. That's why you see financial controls will have 4 items only, which are part of IEC objective. Understood or not? All of you. Now, internal control based on nature, they are again 3 types. Preventive control, detective control, corrective control. Controls, there are processes which will prevent first fraud. If any fraud happened, management would have implemented some process to detect the frauds. Once the fraud is detected, how to correct it? They'll have a corrective mechanism. Like, complaining with policies and recovery actions, all this. These are all corrective controls. Understood. Now, these controls, even though management is implementing, ultimately, these processes are something who will implement? Human beings. They may prone to mistakes. Even though the control is highly effective, the humans will do. Who will implement the control may do a mistake. Yes or no? Human judgment is involved. These are all limitations in the control. Which means no matter how organization implemented the control, there are some inherent limitations. Internal controls will only give reasonable assurance about the objectives of the entity. Not only auditor, even management has implemented so many processes, right? Those processes will only give reasonable assurance about achievement of entity's objective. Understood? This is what there in that entire chapter. So how we do risk assessment? What is risk assessment? What are all the factors to be considered? What is significant risk? Getting the point? Now what is internal control? What are limitations in the control? What are the components of internal control? Components of internal control, the topic is there even in your information technology. There are five components. It's a COSO model. Yes or no? Exactly the same model is what followed in audit. COSO model. In final, we have a chapter called risk assessment. There we will discuss COSO model, COBIT model, COCO model. There are various other models. Able to understand? So this is regarding the risk assessment and internal control chapter, which exactly deals with. But I'm telling you sincerely, don't always try to study 100%. At least keep 20% buffer. Ignore, keep it at last. Only if you study rest 80%, 100% perfectly. Yes, I am the best in this entire 80%. Then only go to the remaining 20%. Rather than attempting 100, 110 marks, averagely and securing 20, it is better to attempt for 70 and secure 50. And easy also. Attempting for 70 and securing 50 is quite easy. That's called efficiency. Getting it? Nowadays you see, hey, it's okay, let me write one answer. Something I'll write, at least half mark they'll put. They'll not. Getting it? They'll see the suggested answer or they'll see scheme of valuation instructions and they'll check your answer and he will know, he will clearly identify that you put some story. Getting it? So this is not a university exam where if you fill the paper, you will get the mark. Are you clear? Now, so once again, analytical procedure we are discussing. Okay. So what is there in the analytical procedure? What are various audit procedure? Risk assessment procedure, further audit procedure. Now what is risk assessment procedure? Risk assessment chapter is what? Clearly explaining. Now I just told you brief. Now what this risk assessment procedure includes? It includes inquiry and inspection, observation, analytical procedure. These 3. Risk assessment procedure includes what? They'll ask you this question. What is risk assessment procedure? Definition. What risk assessment procedure includes? It includes inquiry and inspection. The matter is different. You will find this matter in, risk assessment. You inquire management, you inquire audit committee, you inquire internal auditors, you inquire so and so, you inspect minutes of the meetings. Through this, you will understand what are all the risks the company is facing. Observation. Look at the process, how everything is happening. Look at the inventory go down. Look at the, factory. Next, analytical procedure. Apply logics. Now, I told you yesterday, in the previous session also, when we visited the warehouse, when I saw in one of the big room, scrap is kept. Immediately I got a logical doubt. What registers in respect of scrap they are maintaining? And management replied, for every sale we are recording. What about input? What about inflow? Sorry sir, we don't maintain any record for generation. Record for generation, inward, no records were there. Only sale related records were there. Now, I found the risk, no? How did I find the risk here? By analytically thinking about scrap. Able to understand. Immediately, I applied analytical calculation. I roughly brought production records. Okay. How much inflow totally during the year? Production. Multiplied by what is the normal loss percentage or abnormal loss percentage? Applied. This much is the total scrap generated during the year. I applied ratio analysis technique. This much scrap is what generated during the year. And this much you are mentioning as sold. And how much is there inside the go down? Check it out. Sales value plus closing stock value is equal to generated stock value. Correct? I saw it is not matching. Now, I did analytical calculation, right? That will come under substantive analytical procedure. Right now, whatever I did will come under substantive analytical procedure. Substantive analytical procedure means I will take actual data, on that I will apply analytical calculations. Understood or not? So the word analytical procedure is very broad. Analytical procedure in the context of risk is different from the analytical procedure in the context of substantive procedure is different. That's why if you see here, the word clearly used is substantive analytical procedure. Many will ask me, what's the difference between analytical procedure, substantive analytical? Not this. If at all student ask me this, I will be very happy. My God, student is thinking very good. But student will ask me difference between these two. What is the difference between substantive procedure, substantive analytical? This doubt, who will ask, who did not understand anything about audit? Now what I feel, when I get this kind of doubt, I will not clarify, because if I clarify them, they'll ask another doubt. Substantive procedure means it's completely actual transactions, details and analytical. That's what I'll test. Now immediate second question, sir, what do you mean by actual transaction testing? If I tell them purchases, loss, P&L, all the testing, again they'll ask one more doubt. So that understanding as a whole is important. Now you understood this, the gap. So analytical procedure word will come as part of risk assessment. The word will come as part of substantive. But under substantive procedure, we will not simply call it as analytical. We will call it as substantive analytical procedure. First what I will do, scrap related sales verification I will do. Scrap sales I will do, test of details. I will verify that. Getting it? Then I discovered, see whatever records are available related to scrap sales, test of details. I did that. That is also substantive procedure only, correct? But is it analytical procedure? Scrap sales were there, invoices were given, sale invoices were given, GST calculations, everything was there. How much was sold, how much was delivered, what is the amount mentioned in GST returns, all that I verified. This is what actual details I am testing. That is called as what? Test of details. But when I saw ultimately after testing all this, I got this doubt. What about input production records? That is not there. Now how much you sold? How much you generated? There might be some fraud. Yes or no? Then I applied logical calculations based on actual records. That is called substantive analytical. Substantive means reality. Getting the point? Underlying substance. Getting it? On that actual data, if I apply analytical procedure, and that is called as substantive analytical procedure. Analytical procedure as part of risk assessment is something that we generally do as beginning of the audit. Generally we do risk assessment at beginning. But remember, risk assessment is not one-time process. It's a continuous process. You have to be continuously alert to identify new risk. It is not one-time activity. Today I will do risk assessment. Or tomorrow, even if I find new risk, no. Yesterday it's over. Can I say that? So it's a risk assessment is a continuous process. Audit planning is a continuous process. Have you seen like this the sentence? Audit planning is a continuous process. It is not a discrete phase of an audit. Rather a continuous and iterative process. You might have seen. Iterative means what? Repetitive. Are you clear? Next. So this is where we generally come across analytical procedure. Now, what exactly in analytical procedure I will do? You know, if we did risk assessment, no? That is something similar to analytical only. That is something similar to analytical procedure only. Fine, anyhow, let me take even more better example. Scrap example I told just. How do I find total scrap generated? Records not there. Okay, let it be. But production records there, no. How much raw material entered into the production, that is there, no. Correct? You may get it out. Sir, what if company did not maintain that as well? That means cost records they didn't maintain properly. You will qualify in CARO report. Are you getting the point? Okay. So, production records will be there. Take production inflow of raw material multiplied by normal loss percentage, abnormal loss percentage, scrap generated during the year. Now, what is the value applied? You will get some value. 15 crore is the value of the scrap generated. How much is sold? 10 crore. So in the godown 5 crores there, no? We went and physically verified. Only 2 crore is there. What happened to 3 crore? I will have to investigate. Okay. I will have to investigate about what happened to 3 crores. I will immediately talk to the top management. Sir, based on our analytical procedure, we discovered 3 crore deficit in the stock. So what is your explanation? He asked me what is my basis. You are saying 3 crore difference, sir. I agree. Okay. On what basis you are saying 3 crore? I showed my normal loss workings, all that. Then the director replied me, the company main director replied me, sir, normal loss is not that percentage, sir. It's lower percentage. We have implemented new machineries and all very recently. The normal loss percent has substantially came down. So now it is not that much. You might have given a wrong data by our production manager. He is not familiar with all this. He is only good at production, not good at records. Then I asked him, what is the proof for what you are saying? He showed me all the proofs. Then again I took revised values and I discovered that the total value is 12 crore 50 lakhs. Now what is visible? 10 crore is sold, 2 crore stock is visible, 50 lakhs difference is there, which is an estimation difference. In estimate, some difference might come now up to 5-10% difference is acceptable. Correct? If it is more than that, it is unusual difference. It is something unusual difference. If it is unusual difference, what I did right now? Investigated. Now look at the analytical procedure definition. Analytical procedure means what? Analytical procedure means evaluation of financial information through analysis of relationships among both financial and non-financial data. And what is the purpose of analytical procedure? There is a question here. What is the purpose of analytical procedure? Analytical procedures may help identify unusual transactions, unusual events, unusual amounts, unusual ratios that might indicate matters that have audit implications. What is this? Now, what I exactly did here, since they are saying records were not maintained, I did analytical procedure. I analytically calculated what is the stock generated. Correct? Based on that, how much is sold, how much is lying, I eliminated. I found 3 crores difference, which is not usual, which is unusual. Able to understand. When I find 3 crore difference, what I do? When auditor finds difference in analytical procedure, how do auditor investigate? We have a question on that. Investigating analytical procedure. If auditor identifies fluctuations that are inconsistent with expected value. I expected totally 15 crore. Company showed only 12 crore. 3 crore is difference. Expected value, there is a difference of how much? 3 crore by significant amount. then auditor shall investigate by inquiring management. I inquired management in our example. I went to director and asked him why 3 crore difference. There is a fraud. Immediately what director replied? No sir, some percentage has been changed. You have taken some wrong percentage. Something he replied. Whatever he replied, did I keep quiet? I asked him proof. I verified that additional proofs. Yes or no? Performing additional audit procedures. This question itself has been asked for 4 marks previously. Write about investigation of analytical procedures. Investigating results of analytical procedure. Understood or not? All of you. So, analytical procedure means nothing but we always have some estimation. Analytically, logically we will calculate. See, for a debtor, some particular account, very simple. You know how we do analytical procedure. You might have understood previous year, current year analysis, comparative analysis, yes or no? I am looking at balance sheet P&L. I am looking at balance sheet P&L. So, there are some sales. So 10 crore, last year 8 crore. Some other income, current year 2 crore, last year 1.5 crore. So this is the totals. Then expenditure, last year 9 crore, current year 9 crore, last year 7 crore. Getting it? Operating expenses, last year 5 crore, current year 12 crore. So likewise I am finding. Now tell me, between all this, which you feel unusual? Between these amounts, current year, last year, where you felt the difference is too heavy. Exactly. Now this is called unusual difference. Now say, okay, this is in a pattern. Okay, generally sales have been increased, other income is increased, purchases also increased because there is an increase in sales. So naturally production would have been increased. I understand. But why operating expenses increased so almost more than double? Suppose last year if it is 5 crore and current year if it is 7 crore, I may be not having any doubt. But last year 5, current year it is 12. Unusual difference. Yes or no? Now, when I find this, I investigated. Okay, what is this 12 crore consist of? They gave me breakup. Okay, like auditors remuneration, electricity expenses, fuel expenses, telephone expenses, repairs and maintenance expenditure. Now, repairs and maintenance expenditure, last year it was 1 crore, current year it was 7 crore. Remaining all are more or less similar. Remaining are more or less 20-30% similar. But this is huge. 500% difference. Last year 1 crore, now current year 7 crore. How come? So, now again I verified. What is the breakup for 7 crore? What is the breakup for 7 crore? So, what is the breakup for 7 crore? I verified. Okay, like for January, April month, May month, June month, July month, August. Likewise, month-wise breakup I asked. In all the months it is 10 lakhs, 15 lakhs, 12 lakhs likewise. But somewhere in September month, it was around 5.5 crore. Which means, which month I will pick out? September month. Something is wrong with September month. I opened it. And I saw date-wise. On one particular date, September 14th, example. Getting it? Some 5 crore was debited. What is this 5 crore I saw? It's actually a spare part has been purchased. For a machine, a spare part has been purchased. What is this spare part accounting treatment? If it is integral part of the asset, it has more than 1 year life, or it has minimum life of the asset. We will have to capitalize and depreciate. Or if spare part has a separate useful life, and that can be used even without the asset, then we will separately mention it. Correct? So this is actually a capital expenditure. But how the company charge it to? Where they have charged it to? P&L account they charge it to. Now how I found the difference? By doing inter-period analysis. Getting it? Nothing but analytical procedure. Suppose, traditionally what I will do, I will take 100 samples. Expenses also I will take 100 samples. If this error came in my sample, I will discover. But if my sample does not cover this item, this expenditure item I did not see in the sample, I will feel every expenditure processed. Signature is there, payment made correctly, TDS deducted, GST, everything is correctly accounted. Super. But only when I apply logical analysis to the amounts, I will discover something is wrong. And this is most important procedure in audit. What is most important in audit is not everyone that we discuss. This is most important in audit. You need to look at the amounts logically. Getting it? There is a movie, Tani or one. Read between the lines. Have you seen that? Yes or no? So you must read between the amounts. So why that there is a difference? Last year this much, current year this much. Why? Sales are this much. Why product? Why purchases was low? Why employee cost was high? Last year employee cost was some 15 crore. Current year employee cost was 25 crore. Last year income 100 crore. Current year income 120 crore. Turnover. There is only 20% increase in turnover, but why employee cost has increased almost by 60%? Understood my question? Company operations have increased only by 20%. But why employee cost was increased by almost 60%? On 15, if I apply 60%, 9 crore. 9 plus 15 approximately 24 to 25. Correct? Huh? Last year turnover is this much, current year is only by 20% increase. But why suddenly employee cost increased? Some fraud might have been there in the HR. Some money laundering transaction might be there. So what happened? I asked management, sir, last year, current year, we have declared 50% increment, sir, for every employee. Because of which there is a huge hike in the salary when the increment was declared. Is it declared at the beginning of the year? Is it declared at the end of the year? If it is declared at the end of the year, how come salary will increase? It will increase in the next year, not in the current year. I will question in all these logical dimensions. Every question I want logical, every amount in the balance sheet, every amount in the P&L, I want to understand logically is it correct or not. Okay, vouchers were there, amounts was paid, that is okay, fine. But logically, are they seeming correct or not? Only when I apply analytical procedure, I will discover frauds. If we do not apply analytical procedure, we will not identify unusual transactions. Understood or not? All of you? That's it. So with this introduction, we can start with analytical procedure. So analytical procedures encompass means what? Covers investigation that is necessary for fluctuations, relationships that are inconsistent. What do you mean by relationships that is inconsistent? Turnover increased only by 20%. Why employee cost increased by 70%? Understood or not? The relationship between turnover and employee cost is similar, no? Especially in a service industry, employee cost will directly reflect the turnover. Able to understand? With other information, or it is differing from expected value by a significant amount. If auditor identified fluctuations or relationships which are inconsistent with other relevant information, or the relationship is differing, the fluctuation is differing from expected value by a significant amount. Understood for each term the example I gave? Clear? Now what is the objective of audit procedure? Ultimately we want to obtain evidence through analytical procedure. So we will design and perform near the end of the audit, which help the auditor when forming overall conclusion as to whether financial statements are consistent with the auditor's understanding of the entity. Now I look at logically how to understand this organization, whether whatever amounts I verified are the matching with logicality of my understanding. So that is what the objective of analytical. Remember, we will not only do at the end of the audit, we will be doing throughout the audit, analytical procedure. Now, what in analytical procedure we will check? We will compare prior period data. We will also compare the existing data with anticipated data. We will compare with similar company data. Yes or no? So what are all the examples of analytical procedures having consideration of relationships? Like they have given few examples, like non-financial information, financial information, like number of employees, payroll cost to turnover. That is one relationship. Okay. So among elements of financial that would be expected to conform to a predictable pattern based on entity's experience, such as gross margin percentage. Like every year you can predict how much company will grow. Getting it? So that is expected value. Now actual growth rate is actual sales value have not grown by expected values. So I will naturally focus on that differences. Understood or not? So thus analytical procedures may be segregated into client and industry data comparison, prior period data comparison, client versus actual versus budgeted comparison, An auditor determined expected results. Client data with auditor expectations. And client data with expected results using non-financial data. So this can be asked. What analytical procedure includes? What kinds of comparisons analytical procedures we will do? You need to write all these points. 4 marks question. Understood or not? What is the purpose of analytical procedure? We want to use comparisons. We use relationships to assess whether account balance, other data appear reasonable. I used a comparison of last year, current year. I found repairs and maintenance appears not reasonable. Last year 1 crore, why this year 7 crore? It's unreasonable. Yes or no? These helpful in detection of unusual affairs and mistakes in the accounts. Correct? Through that repairs and maintenance example, I discovered how I discovered a capital expenditure is debited to P&L. Next. Like examples I have given, establishing relationship that exists between certain balances included in balance sheet and statement of P&L and comparing them with those existed in the previous year. Repairs and maintenance I compared with last year. Reconciling physical balance of assets with relevant data. Obtaining statements from banks, debtors, payout, creditors and reconciling with relevant balances. I will cross verify. These are all analytical calculations. Confirmations for outstanding incomes and expenses by preparing reconciliation statements, and they have given various other examples. Now, when we do analytical procedure, we may do at planning phase, we may do while doing the audit, that is called testing phase, or we may do at completion phase. Mainly at planning stage, analytical procedure we do as part of risk assessment procedure. At planning stage we do analytical, right? As part of risk assessment procedures we will do this. Yes or no? Why I do at planning stage? We want to identify areas of potential risk. Yes or no? By indicating aspects of and developments in the entity's business which is previously unaware. We don't know this kind of relationship. We don't know until we apply analytical. We never get a doubt. The information will assist the auditor in determining nature, timing, extent of his audit procedure. The moment I went to go down, the moment that they told me that scrap registers were not available, I immediately get a doubt. I will put in my audit plan, scrap, senior article will verify. I will also verify because there is a inadequate records, which is a fraud risk factor. Able to understand? Analytical procedures will use both financial data and non-financial. Do analytical procedures depend only on financial data? Do they depend only on non-financial? Both. We compare non-financial to financial. You might have done in FM ratio analysis. That is entirely analytical procedure. That is entirely analytical procedure. One example I'll give you from the ratio analysis. Debtors turnover ratio is there, right? Last year debtors turnover ratio was 5. Current year debtors turnover ratio was 6. Getting it? Now 360 by 5, you get some approximately how much more? 72. Correct? Whereas 360 by 6, 60. Correct? Last year, debtors turnover ratio, 72 days worth of credit sales were outstanding. Whereas current year, 60 days worth of credit sale was only outstanding. First of all, what is the actual credit period policy? 40 days. Then why this much worth of debtors were outstanding? Why this much worth of debtors were outstanding last year? Okay, forget last year, some other auditor. Current year, I am the auditor, right? When the company, debtors is, when the company credit period is 40 days, out of total sales, divided by 6, if, debtors turnover, how I calculated turnover ratio, turnover divided by trade receivables is equal to 6 it came. 360 divided by 6 is equal to debtors holding period came. So, debtors credit period is actually how much? In the order 60 days. But management is saying me 40 days. Then why for me logically 60 days coming? What happened? Sir, huge credit sale was made in the last month, sir. Okay, then if that is the case, okay, fine. Ratio might have given a different result. But sales every month even. Every month sales are even, more or less same. Then why this much variation? Some long outstanding debtors might be there. Some long outstanding debtors. What do you mean by long outstanding debtors? They were liable to pay from long ago. Is it indicating provision for doubtful debts? Whether entity created a provision, cross verify, not created, you discovered mistake by this. This is called aging analysis as well. Understood or not? FM ratio analysis is used for this only. Ratio analysis is not for, like this thing. This is for understanding and interpreting the results. Understood? By using how much fixed assets I generated this much turnover, fixed asset turnover ratio. I compare with another company. Another company fixed asset turnover ratio 10. My company fixed asset turnover ratio is 6, which means I am underutilizing my assets. That company with the same investment, 10 times turnover they generated. Even I invested same amount, but I generated only 5 times turnover. Understood or not? Fixed asset turnover ratio means what? That is how we understand. Every ratio has a meaning. Are you getting it? IRR is a ratio, right? Internal rate of return. My company IRR is 17%. Another company IRR is 25%. Shareholder is questioning me. I will move to that company because I am getting better return. Understood? So, these are all various understandings. Next. What is substantive analytical procedure? Substantive procedures includes test of details and analytical procedure. Getting it? And therefore, analytical procedures which are one part of substantive audit procedures are also called as what? Substantive analytical procedure. Now, when will you use this analytical procedure? It is based on auditor's judgment. Ultimately, what is the objective of using this analytical? To reduce audit risk. Ultimately, my opinion should be right. My opinion should not go wrong. The auditor may inquire management regarding availability and reliability of the information in order to apply substantive analytical and result of that analytical procedure. The auditor should consider the following factors for substantive analytical procedure. This question has been asked in the last attempt, I think so, last or that before attempt. For 4 marks they have asked, for 4 or 5 marks. What are the factors the auditor should consider? What are the factors the auditor should consider for substantive procedures? First, in order to apply analytical procedure, first I must need some background data. Yes or no? And remember, I can apply analytical procedure only if I can disaggregate the data into multiple parts. Example, you see, first in the P&L I found operating expenses huge variation. Then I asked breakup. Then they gave me breakup for each operating expenditure, repairs and maintenance. That alone is not sufficient. I want breakup month wise. Now tell me, originally between 2 items I found difference. Then this is aggregate data. Now I disaggregated or not? I split it. Again I split it into months. This is called disaggregation. The more disaggregation that you can do, the better result you can get. Understood or not? The more micro level you can go inside, you can understand the problem that, strongly. That's what. So the degree of disaggregation available that directly affect degree of usefulness of detecting material misstatement. So account type, this is little lengthy point, not required. Source. Some class of transaction tend to be more predictable because they are numerous similar transactions, whereas some transactions which are non-routine and estimation involving significant class of transactions, these items may not be predictable over time. And predictability. How far you can predict a particular transaction? Will it move in a particular pattern? Suppose, can I predict cases against the company? Legal cases. Last year 10 cases, current year 12 will come. Can I say that? Exactly. So where you need to apply analytical, where you should not apply analytical, you must have, understanding, that judgment. And remember, analytical procedure will give evidence for whether everything is accounted completely. Is the value reasonable or not? Will analytical procedure give me idea about ownership? If I apply logically, can I understand building who is owner? I am not astrologer. Correct? So in analytical procedure, we do continuously what? What can go wrong analysis. Same risk analysis principles we apply. Understood or not? So what are the techniques? Trend analysis, ratio analysis, reasonableness test, structural modeling. What is trend analysis? In the last exam, this was asked. The analytical procedure implies analyzing fluctuations by comparing current year to prior data. What is this technique is called as? Briefly explain. 4 marks question, last attempt exactly. Yes or no? They asked about trend analysis. Trend analysis is commonly used technique. It is nothing but comparison of current data with the prior balances or with the trend in 2 or more prior periods. Here, the auditor evaluates whether current balance is in line with the trend established in the previous. Whatever past trend is there, current same trend continued or not. Generally, trend analysis I can apply on rental expenditure, salary expenditure. Even turnover I may not apply always. Sometimes I can apply if the industry situations are normal, I can apply. Suppose between 2019 and 2020, can I apply trend analysis? Because of the COVID situation. So I can't trend, I can't estimate the trend. Yes or no? For medical industry, the trend is extremely high. For remaining industry, the trend is extremely low. Able to understand? Ratio analysis. Ratio analysis means what? Ratio analysis is useful for analyzing assets and liabilities, revenue expenditure account. An individual balance sheet account is difficult to predict on its own, but its relationship with another account is more often predictable. What is that sentence meaning? Yeah. So what is that exact meaning? See, this is Reliance company. Tell me what is plant and machinery? How much? Can you predict on its own? You can't. But if I give you turnover of the machine is this much, asset turnover ratio is this much, can you predict the third item? Exactly. So an individual balance sheet item or individual P&L item cannot be predictable on its own, but its relationship with others is often more predictable. Ratios can also be compared to the ratios of different entities or prior period. For example, auditor can review GP ratio for the current year. The auditor can compare the GP ratio with the earlier years or GP ratio with other company, why this company is performing low, where the company is lacking exactly, maybe there might be some frauds in that area. Understood? Simple, you want to identify something unusual, where this company is not going right. I just want to figure out where it is going wrong and why it is going wrong. I want to figure out. If it is because of some fraud or error, material misstatement, that is concerned for me. Are you getting the point? Then reasonableness test. Reasonableness test means we applied no repairs and maintenance. Last year it was 1 crore, current year it was 5 crore. How come? Unreasonable. Are you getting the point? It is not only trend. I felt 5 crore repair is unreasonable. What 5 crore worth of repair on a single day? It's unreasonable amount. I investigated and I found it's a spare part and I found it's a capital expenditure wrongly debited to P&L. So this is not something trend analysis. We do not rely upon past period, but we rely upon non-financial data. Getting it? By using non-financial data, example, turnover 20% increased, salary cost 70% increased. It feels something unreasonable. Able to understand? So is it reasonable or not? Next. These tests are generally more applicable to income statement items and certain accrual and prepayment accounts. In other words, these tests made by reviewing relationship of certain account balances to other balances in order to identify reasonableness of the amount. Interest expenditure against interest bearing obligations, like how much I borrowed, how much I'm giving. Next, raw material consumption to production. Raw material consumption to production is also a technique of ratio analysis, but this here the main objective is it appearing reasonable or not? Management is telling me 10 crore worth of inventory was sold, 2 crore worth lying. How much is generated? Totally they are saying 12 crore. Is it reasonable? Is it correct? I want to check it out. So that is called reasonableness test. Structural modeling is a statistical tool, so nobody is using structural modeling in audit. Even in reality also nobody will be using this. This structural modeling technique might be useful in non-financial fields, probably. Not in financial fields. Can I use only analytical procedure as a single substantive audit procedure? I will not do test of details. Can I use this only analytical procedure as a pure audit procedure, substantive procedure? If test of controls are highly effective, you can apply just analytical procedure, logically check everything seems right. Controls are fine, no, which means actual transaction will be done well. Just see logically everything appears fine. If logically everything appears fine, process is correctly followed, why you have to check internally again? Go. It's waste of time. Focus on some other area. Are you getting it? Analytical procedures will be applied either alone or in combination with test of details. So, determining suitability of particular analytical procedure for given assertion, what is the assessed risk of MMS? All this you need to take into account. If the risk of MMS is low, controls are operating effectively, generally we can just apply on only substantive analytical procedure. Further, if you want to apply only analytical procedure, how far the data is reliable? If the data is very accurate and reliable, based on analytical procedure, whatever decision you are taking will also be reliable. If the data is moderate, then better don't apply this alone. Actual transactions also you have to test. Now develop an expectation of recorded amount. Some scrap value totally recorded 12 lakhs. What is expectation? 15 crore. And evaluate whether expectation is enough to identify a misstatement that individually or when aggregated with other mistakes may cause financials to be materially misstated. So develop an estimate, develop an expectation and compare with the actual and see how far it is detecting a material misstatement. Have you seen all this? I feel like you have never gone through all this. In sampling also your faces are similar. In documentation evidence chapter also same expression. Now, suitability of a particular analytical procedure. This question also asked many times. Which method of analytical procedure is suitable? Like trend analysis suitable, ratio analysis suitable, reasonableness suitable. Which method of analytical procedure is suitable for a given assertion? I want to check employee cost, whether it is reasonable or not. Should I apply reasonableness test? Should I apply trend analysis? Should I apply ratio analysis? It depends on what? Auditor's professional judgment of how a method will discover a material misstatement. If a particular method discovers mistake, remaining methods are not discovering mistakes. Which is suitable method? The method which detects misstatement is a suitable method. Sometimes an unsophisticated method. Sometimes an unsophisticated method may be a most reasonable, suitable method. Example, I called one employee, I told him close your eyes. I opened chits, purchases, sales and all. Pick one chit, he picked sales. I investigated sales, fraud was discovered. Is it analytical, intellectual? Nothing, exactly. So, substantive analytical procedures are first of all generally more applicable to large volume of transactions that tend to be predictable over time. Comment, they'll ask you the question. You need to write this answer. Analytical procedures are generally more applicable to large volume of transactions that tend to be predictable over time. Comment, 4 marks question. You need to write the below continuation. The suitability of a particular procedure will depend upon how effective it will be in identifying a misstatement that causes financial statements to be materially misstated. Sometimes even an unsophisticated model may be effective when discovering a material misstatement. Different types of analytical procedure provide different levels of assurance. Which method is suitable for the given assertion is a matter of professional judgment. It's okay, that's enough. Now what factors you will consider on reliability of data? Now you see, what are the factors to apply analytical procedure? First point we discussed is availability of reliable data. One of the factor is only if the data background is available correctly, then I can only apply analytical procedure and happily proceed. Now, how to say whether data is reliable or not? How to say whether data is reliable or not? From source, from where the data is obtained. If the data is obtained from independent sources, generally it is more reliable. How far the data is helpful for comparability. How far the data is relevant for this assertion. What are the controls over preparation of the data? This is most important thing. What are the controls over preparation of data? This itself can be asked as a 3 marks question. One of the factor for ensuring reliability of background data for applying analytical procedure is controls over preparation of the data. What are the points you will consider? Only this point that can be asked. Able to understand? If accounting records, employee payroll records are 100% accurate because they were completely automized, they were completely electronic, now nobody can change, means controls are effective. Now I will take that data and apply my logical analysis to it. Then my result of analytical procedure will be more accurate. Understood or not? So like that we need to discuss. This is actually 5-6 hours chapter approximately. This paragraph is not required. Investigating results we understood. How analytical procedure helps in drawing overall conclusions. How analytical procedures will help auditor in concluding overall. The conclusions drawn from the results of analytical procedures are intended to corroborate conclusions formed during the audit of individual components. When I originally verified purchases, controls I saw, everything is effective. I took 100 samples, then everything was completely rightly processed. So that originally I felt when I conducted audit, normal substantive procedure and normal compliance procedure, I felt purchases, everything is true and fair. Now I apply logically everything. Now both should match. No, logically also I should feel yes, they are completely reliable. Actual verification also should be completely reliable. So this analytical procedure helps to draw reasonable conclusions on which he will base audit opinion. Because of analytical procedures, you will identify previously unidentified risk. Correct? Normally when I apply controls evaluation, normally when I check actual transaction, vouchers and all sample, I may not identify any problem in that. But when I logically think why this account is unusual variation, then only I discovered. Correct? In such circumstance, whenever auditor is identifying previously unidentified fluctuation or risk, please revise your auditor's assessment of risk and modify further audit procedures accordingly. This can be asked as a true or false statement. This can be asked as a correct or incorrect statement. When auditor has performed analytical procedure, the auditor may come across previously unidentified or unrecognized risk of MMS. Even though the auditor need not revise his further audit procedure or risk assessment procedure, incorrect. As per SA 520 analytical procedure, because of the result of analytical procedure, if auditor is aware of previously unidentified risk of MMS, the auditor shall revise the auditor's assessment of risk and modify further audit procedures accordingly. Understood or not? Now consideration specific to public sector entity while applying. In public sector, when you're applying analytical, you will apply propriety principle as well. Whether the expenditure incurred is reasonable expenditure or not, government audit propriety principle is there, that also you should keep in mind. That is what this entire point is saying. Clear? That's it. So that's regarding analytical procedure. Almost all the topics we have covered. If at all you think analytical procedure is having 3 or 4 topics, come out of it. Every chapter I am seeing, like many of you don't have that much connection with 100% syllabus. Hardly you are smiling for 40% syllabus and crying for 60% syllabus. Which means you focused only on 40%, which is easy. Getting it? Like I'm telling no. See, why all these things are happening is very simple. 4 or 5 years before, whoever teachers were there, they were only continuing even today. And there's nothing wrong. But as long as they don't update, they should not continue. 3-4 years ago, I can say 5 attempts before, May 2019 before, the auditing paper was 1 or 2 papers. Quite easy. Getting it? They used to ask straight question. They never test a question from analytical procedure and sampling, you know. Previously, we never seen. We don't even know that these chapters were there, you know. When we are writing exam at final, we don't know that these chapters were there. Inter also, we don't know that these chapters were there. All we know is company audit, documentation chapter, standards, different types of entities, government audit. We have vouching and verification. You have items of financials, we have vouching and verification. That's it. We only know that chapters and we only read from that and we secure 50-55. But if you read only those chapters, you will secure 25 for sure. Getting it? But we require 50 plus, no, minimum. In order to secure 50 plus, you need to have comment on audit report, documentation, sampling, fraud. We don't even know that there is a chapter called fraud, you know, earlier. First of all, in audit, misstatements means fraud, error. We don't know that. That's the level of coaching that time. Getting it? So people are not updating themselves. Still, many are in the old assumption. Like, okay, auditing means, kuch bhi nahi. It's very easy. No, not. Just check last attempt paper, that last attempt, last 5 attempts papers you check. Any paper you take of your choice. The questions are very, very clever. The questions are very in-depth. They don't ask you, hey, tell me what are the methods in analytical procedure. No. They'll give you a sentence. What is this method? Briefly explain about the method. That's how the question is. So, I just opened you entire syllabus before you. What is there exactly? Now it is your turn to prepare. Getting it? And I gave you for every chapter a clear-cut idea how it works. How the chapter works. I clearly gave you an idea. Because we don't have, it's not a regular video. We have time restrictions. Moreover, your exam is near. It's not possible for us to discuss 100% in depth. Getting it? So with this, analytical procedure chapter is over.